All right, let's dive into one of the biggest, and I mean biggest, financial stories happening on the planet right now. India's digital payments boom. And right at the center of it all is this thing called UPI. In just a few short years, it has totally changed the game for how hundreds of millions of people deal with their money. The scale of it all? Well, it's just staggering. So, just how big are we talking? Well, UPI now handles over 17 billion transactions. And that's not per year, that's every single month. Think about that. It now makes up more than 80% of all digital payments in the entire country. This isn't some trend on the horizon. It's a full-blown revolution happening right now in every part of the economy. So, with that kind of explosive growth, you gotta ask the obvious question, right? You see it everywhere, people scanning QR cards in fancy stores and at the tiny chai stall in the corner. But does all this digital action mean the good old-fashioned banknote is, on its way out? Is this UPI tsunami really washing away India's deep, deep reliance on physical cash? Well, that's the big mystery we're gonna try and solve today. Now, you might be thinking, okay, it's just about convenience, but the stakes here are so much higher. This question goes right to the very core of India's financial system. We're talking about the fundamental plumbing of its entire economy. That's right. The Reserve Bank of India, the country's central bank, is watching this incredibly closely. See, how much cash people use or don't use affects everything. It impacts the cost of just printing and moving money around, and it even changes how well the RBI can manage interest rates and keep the banking system stable. It's a really big deal. And this slide really lays it all out, doesn't it? When lots of people are demanding physical cash, it literally pulls money out of bank deposits. That can make it tougher for banks to give out loans. But when that money stays digital, it keeps the banks healthier and makes the whole financial system run more smoothly. So you see, this isn't just about tapping your phone to buy something, it's about the health of the entire economy. Okay, so we know why it matters. Let's start our investigation. What's the first clue? Let's look at the big picture, the national data. What does it tell us about this showdown between UPI and cash? Our first clue is a real biggie. Now, get this, while the total amount of cash out there is still going up, the speed of that growth has hit the brakes, slowing way down to about 4% recently. But here's the real kicker, the part that tells the true story. If you account for inflation, the actual value, the purchasing power of all that cash people are holding, it actually dropped last year. That is a massive signal that digital payments are stepping in and taking over. And here's our second clue, the incredible shrinking transaction. Just a few years ago, the average UPI payment was over 3,000 rupees. Now, it's been cut by more than half, down to just over 1,400. This is huge because it shows UPI isn't just for big purchases anymore. It's being used for all the little, everyday things. The stuff that used to be completely dominated by cash. And the final clue from the national scene? People just aren't going to the ATM as much. The amount of cash being pulled out of ATMs, when you measure it as a slice of the whole economy, has been going down steadily. It's pretty simple logic, right? If you're paying for more and more things with your phone, you just don't need to carry as much physical cash.
So, when you put all these clues together, the national picture seems pretty clear. The evidence is pointing in one direction. UPI isn't just another option to pay alongside cash. No, it's actively replacing it for a whole lot of transactions. It's changing the country's habits in a fundamental way.
So, you'd think that's it then, right? Case closed. UPI is winning, cash is on the way out. Well, hold on. It's not quite that simple. Because the moment you zoom in from that big national picture down to what's happening on the ground state by state, the story gets a whole lot more complex, and honestly, a lot more interesting. And this is where we get our plot twist. It turns out this UPI revolution is not happening everywhere at the same speed. The impact is wildly different from one state to another. It's really a tale of many different Indias. Just take a look at this. It's pretty wild. A tiny group of just 10 states is responsible for a massive 80% of all UPI transactions. That's an incredible concentration of activity. It shows us that while some parts of the country have gone all in on digital, other places are still very much living in a cash-first world. And here you can see that digital divide in black and white. You've got states like Telangana, Maharashtra, and Andhra Pradesh that are leading the charge. These are often places with big cities and solid tech infrastructure. But then you have regions like the Northeast, where the adoption has been a lot slower.
That could be due to all sorts of things, from the reach of banking to just long-standing cultural habits around using cash. But there is some good news here. The data shows that things are starting to change. We're seeing what experts call convergence, which is just a fancy way of saying the gap between the leaders and the laggards is starting to close. The pandemic was a huge push, of course. It forced pretty much everyone to look for cashless options, and that momentum is now helping the rest of the country start to catch up.
Okay, so we've got a national trend that looks one way, but a regional picture that's way more uneven. For our final section, let's try to get to the why. What are the deeper forces really driving all of this? The research points to three really fascinating insights. First, the main engine of change isn't necessarily the richest states anymore. It's the mid-income ones. Second, the human element, things like education levels and having a formal job, is absolutely crucial for going digital. And third, even in the most digital-savvy states, you eventually hit a kind of plateau where the switch away from cash starts to slow down. And that brings us to this key idea, behavioral inertia. It's basically the concept that some uses for cash are just sticky. People keep using cash for certain things, not because they have to, but out of pure habit or cultural tradition, like giving tips or small loans to friends, or cash gifts at a wedding. This creates what you could call a cash floor, a level of cash use that's really, really hard to break through, even with the best technology in the world. All right, we've looked at the national data, we've seen the regional plot twist, and we've dug into the deeper reasons why. It's time to bring it all together for the final verdict. So here's the final answer, and it's a nuanced one. No, UPI is not killing cash, but what it is doing is fundamentally changing cash's job description. It's gone from being the default for everything to being used more selectively. UPI is an incredibly powerful substitute, and it has put a major dent in cash's growth. So the big takeaway is this. India isn't really becoming a cashless economy, it's becoming a hybrid one where both digital and physical money have their place. And this whole transition is happening at very different speeds all across the country. And that leaves us with one last really interesting question to think about. We've seen that this cash floor exists thanks to habits and culture. So as digital payments keep getting better and spreading further, what really is the long-term future of cash? Will its role shrink even more, down to almost nothing? Or will it always be with us for those specific, sticky situations? The story, it seems, is far from over. Thanks for joining this explainer.